Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. We are going to have an interesting guest today. Means we talk about real estate and crypto all the time. So I wanted to talk about with someone who had like solid, long tech background and what he has done. So welcome to the Wealth Matters show, Christopher Nelson. Christopher is an experienced technology executive. He has seen 2x IPOs, real estate investor as well, author and principal and co-founder of Wealthward Capital. So he's also writing a book called No Door to IPO. So I like the title. I'm looking forward to, as soon as he has the book available, I have asked him to send me a signed copy and he graciously accepted. So I'm looking forward to it. And he's also launching his own podcast called Tech Careers and Money Talk. I think this is very important subject as well. I think because a lot of us work in tech and then we forget, we think that, oh yeah, we are making a lot of money. And then we end up, cutting the check to Uncle Sam, half of it, right? Especially living in California, not thinking about how much money we get in our pocket. So I'm looking forward to this podcast. But welcome, Christopher.
Hey, thanks so much, Alpesh. Right, just fan of the show and in your conversations too. And I know that you have a lot of technology employees and executives that listen to this podcast. So I'm excited to get into it and share as much as I can.
Thank you, Christopher. So let's start with this interesting question. Tell us something funny, strange about yourself.
Well, you and I, here's something that's funny because I've spent quite a bit of time in India.
Yes.
So there's one thing that I'm doing in my house that is very common in India that people here think that I'm crazy. And what that is I'm raising my children to speak 3 languages. So I speak Spanish with my sons. My wife speaks French. That's her mother tongue. I learned Spanish, but I think it's really important to teach them. And in English. And everything here, the majority of Americans that are from here think that's crazy. And I let them know, I said, the majority of my friends in India, 3 languages, right? Unless you live in and around Delhi, it's going to be your mother tongue, Hindi, and English all day long.
You are so right. You are so right. So yeah, I speak Hindi, Gujarati, and English fluently.
Right.
And then of course I can understand other languages too.
Right. And so, and this is the thing. So I was learning Spanish and I was spending a lot of time in India before I had my family. And it was really, my friends there, when I was in their homes and I saw their children just speaking fluently from one to the next, I realized this is totally possible. It was very empowering. And so I made the decision. So that's where I always tell the story that, I'm raising my kids in this sort of Indian method of just 3 languages. That's the minimum.
No, that's amazing. And what I have read, again, I didn't know after coming here, but you got to raise your children at least bilingual, for their overall development, self-development, personal brain development, all that. So 3 languages, kudos to you.
Hey, thank you. Thank you. Yeah.
So let's talk about, because this is a show about wealth building. What are some of the assets you own, right? Real estate to cryptos or whatever, or invest in, and why?
Yeah. So I'll start with the more traditional ones, and we'll go to the exotic ones sort of later. But I am still exposed in the market, right? I still have a good portion of my portfolio. I think, like many technology employees, I've got a good position in the market. I also have, higher exposures to companies that I used to work for. Part of working for companies, you get a chance to build that portfolio. In addition to that, right, we have here in Texas, we have a small portfolio of single family homes.
Nice.
Also invested in multifamily as well. We've also moved very heavily to mobile home parks and very bullish.
Oh, wow. Yeah. That's what we do. That's what we buy, large mobile home parks and syndicate. So that's amazing.
Beautiful. And then, we've been investing in farmland as a capital preservation play. I think very similar to mobile home parks.
Yes.
Shrinking asset class. There's a huge opportunity there. And then we invest also in, some venture capital as well, right? I mean, you can't be a tech guy and not do some
And
venture
not, yeah.
capital. Back to real estate, I forgot we do some self-storage. We're
Oh,
also
wow. Okay, awesome.
in ATM funds as well,
Oh, wow.
just
That's cool.
for cash flow. And then I'd say, the biggest investment or this is going to be a lead into what we're talking about, but I also invest in myself, right? I mean, sometimes I can spend 25, 30, $50,000 a year in training
Yes.
different courses because I believe that I am my greatest asset, and I need to make sure that I am investing in myself, because whether that's in a technology career where I want to be a very efficient executive and I want to trade my time and talent for equity, or on the entrepreneurial side where I want to get better deals done and I want to again operate at a high level, investing in yourself I think is the greatest investment and the most important investment that you can make.
Well said, Christopher. Really, it's amazing. And friends, listen to this. Christopher worked in IT, in tech companies, even visited India, and has been doing this for a while. But he is not just in stock market. Listen to it's so important that he's got single family, like me, multifamily, 2 mobile home parks, self storage. Like we are speaking to the choir here, but a lot of my friends believe that, oh, we got a lot of stocks, or we got this stocks from my companies, and I'm good forever. No, you got to diversify. You got to invest in some tangible assets, and also you got to create cash flow. So
that is the big thing that I really try. Wealthward Capital is really focused on technology employees, teaching them the importance of cash flow, because in 2019, I took a sabbatical from 9 months from tech company. And guess what? We had in our family portfolio well over $150,000 of cash flow. There was no stress.
Right.
I know people who have a high net worth living in the Bay Area, and I'm talking, 8 figures, and they're like,
yes.
How do I retire? Because they don't have income in their portfolio.
Yes.
They think that then they're going to have to drain it.
I believe you.
Well, yeah, and the big lie was when the bond market broke in 2008. Yes. All of a sudden, these wealth managers, these fast food wealth managers said, "Oh, you have to actually now do the 4% rule. So instead of 2 million at a 10% return, which is $200,000 a year, now you got to get 5-6 million, take 4% a year.
Right.
You won't even get that. But then you have to pray because you're reducing your principal." Where when you think at ultra net worth individuals, they usually have 50% of their portfolio is giving them income.
Yeah, and that's the key. Again, this was great, because 50% of your portfolio has to be giving you income. And that's what I do. 50% of my portfolio is in real estate or ATM funds, and Bitcoin mining, where I'm getting monthly income.
That's right. So important. Definitely.
Oh, that's great. So let's talk about the tech, because we were talking about equity. What is the biggest struggle people have when working for tech equity?
Oh, I'll tell you, the biggest struggle is having a roadmap or understanding how. I think especially when you're getting started, and I know that this was my story, is like people know intuitively like it's a good idea, and they should, because anybody who's read Robert Kiyosaki knows that, hey, if you're an owner of a company, you're going to make money while you sleep. And this is to me, it's tech. And this is this concept I call in my book, I call it Kiyosaki's bridge, where you can actually be an employee and an owner both. That allows you to compound your career compensation. So people conceptually know this is the right thing to do, but they don't know how to do it. And here's what I'm telling you they need to do. This is sort of the big idea is they need to think like an investor. They need to really take a step back. And what do investors do? They have a lens that says, where's risk, right? So I think the main story we get told is if you go to work for this early stage startup, 35, 40 people, and then you work for it for a few years and you hope and you pray, it's going to make you boodles of money.
Right.
Well, that's just like saying in real estate, the only way to make money in real estate is opportunistic. You got to find a piece of dirt. You
Yeah.
got to go get all the permits. You got to build it. And both you and I know that's the last thing you do in real
Yeah.
estate. You go there. And so this is where I'm trying to show people is like, understand there's a risk profile that if you go to work today for Google, there are director roles that will match your compensation, $200,000 a year with equity, give you liquidity in the first month. That's a low risk proposition where you're able to compound your career earnings right out the gate. Or for myself, I've always been a value add guy. So I always look for companies, and I've created a method where I look for companies that are 18 to 24 months for an IPO. I go to work for them, and we either go through the IPO or I cash in my chips and I say, well, that didn't work. Maybe I'll take a little equity off the table and I go to the next company.
Wow. So you are not waiting for long. And I started thinking about my story. I have only worked for one startup which got acquired. But of course, and I was employee number 49. So I was early, not very early, but still early. By the time when we were sold, I think we were like 400 employees. So, but I barely got paid anything. So, as you said, right, you work hard and you may not even get anything. So it's better to, plan it out.
Well, to plan it out, and this is where, I think the biggest struggle is, when people think about how do you work for equity, number one is you have to understand what you're being given. You have to understand what is the equity. If you're getting an incentive stock option, understanding that, okay, that's going to be a big tax play. Like if I actually get this option, I need to figure out when I want to exercise, if I want to exercise, etc. Everyone also needs to, anybody who gets a stock agreement should go pay the $350, $400 an hour for a stock options lawyer to review that. And to your point, let you know, are there clawbacks? Are there things, right? It's an investment. You do due diligence up front and go, what is this? And then also in addition, you also want to look at the fundamentals of the company. What are the financial fundamentals? I always look at the leadership. Who are the players? Have they done this before? Do they have experience? Because generally speaking, success breeds success.
Yep. Yeah.
And so, so the CEO, Godfrey Sullivan, who I went through a public event with at a company called Splunk.
Oh, yes.
When I joined GitLab in 2020, as I was doing my due diligence, in the middle of that process, Godfrey Sullivan joined the board of GitLab. I'm like, okay, points for working for GitLab, right? Because again, a winner knows what a winner looks like, right? He's investing his time and talent as well. And so this is where once you put on the lens of the investor, is anything guaranteed in life? No. You and I both know as investors, no, you diversify. But the reality is that you can de-risk the situation and you can look across the spectrum and you can build yourself a portfolio of equity that then you can go and diversify.
No, that makes so much sense, right? Because I had some friends who were working at VC funds and they were like, we know that 70% of the time we fail, but the 30% or 20% of the time we make money, we'll look at 1,000 to 10,000% return on our money. Right?
That's right.
So you got to diversify. You got to, they research, of course, like crazy, and still they fail, right? So it's nothing is guaranteed, but they also put their chips in a lot of places, and they know that they will succeed.
That's right. And this is where I think if people look at their career as these, 2-year chunks of investment, where it's like, I'm going to do 2 years, then I'm evaluating this company the entire time. How is it performing? Is it meeting its sales goals? How is it hiring? What is the culture like? What's the product fit like? Like that's where we should start. Product fit, that total addressable market. Those are things that are really going to, again, set you up for success, de-risk it as much as possible.
Oh, that's great. So, and let's talk, because you mentioned about thinking like an investor. So
yeah.
When you talk to these people, are they thinking like an investor or a speculator with their careers?
Many people are thinking like speculators. And again, this is where, because I think nobody's taught, like this is where the majority of people that I speak with, and are eager for this message, are eager for this conversation. They just don't know, like it's a good idea, but it's like, where do I get information? Who do I talk to? Right. And this is where, for myself, right, my story is, my first startup venture I left, I had a successful career at Accenture. I was doing technology. I helped build a Salesforce practice there. was traveling all over. I got burnt out and I said, I'm going to go join this startup company. And I had no idea what I was doing. A year later, working for a bad boss, nursing an ulcer, miserable failure. But what I did is, in reflection, as I realized, like, there's a pattern here. There's a pattern of people who are doing this serially. I called them up and I talked to them. What do you do? What do you do? And I started just reaching out. Hey, can I have an informational interview? Oh, you want to know about my job? No, I want to know why you picked that company. Tell me more. And so in the point I'm trying to make here is that, I think people, again, know it's a good idea, but they speculate because they're not doing that deeper level of due diligence that says, okay, how do I go to work here? Many people I know who go to work for stock, they don't know what to do with it. Like we're going through now my second IPO, because arguably my first IPO, I knew a little bit, but I wasn't sophisticated by any means. I was still really much a student.
Right.
I tried to make sure that anybody who was on my team who wanted to know, do you want to know what an ISO is? Do you want to know what I'm doing with mine? Let's have a conversation about it so that you can understand what to do, because I've heard too many stories of early stage employees who've done the dream, like, hey, we went through this startup, then it went public. They're 10 years into the company, have a passive stock, and they're like, okay, what do I do with this now? It's just a thing. And it's like, well, the tax benefit's too late. It's all going to get taxed as wages now. Your opportunity, you missed it.
Oh, yes. Yeah, and I'm going to ask you about the taxes actually, but no, that's a great point you brought up. So that leads me to another question. What are the top 3 things you should do when you get tech equity?
Ooh, the top 3 things. Number 1 is, and I mentioned it before, is you want to get a copy of that stock agreement and you want to go spend the $300 or $400 for an hour for a lawyer, get it reviewed, understand what it says and all the nuances of it. And once you do it once, you'll know sort of the sections, just like a PPM, what you have to pay attention to and whatnot. Go do that. So number 1. Number 2 is consult a tax planner. And I'm going to say
so important,
because there is a designation in the United States of America. It's called a CTP, Certified Tax Planner. It's not somebody who's just going to prepare your return. Input, fill out a document. No, they're going to get your situation. They're going to see what you're doing. They're going to put together a 2 or 3 year plan to lower your tax burden. That is what you need to really do. In a second, once you sort of read the agreement and say, okay, I want to go to work for these people, because there's stories, right? There's a very famous story of Skype, right? When Skype was sold to Microsoft for billions, those employees got nothing because there was a clawback clause in there. And it's, people go and search, Skype employees anger, it'll be there. So that's why doing that first is important. Tax planner second. And then third is really understand and monitor what are the sales, what are the expenses, and then really, I would say the execs, and I focus a lot on their decision making. Are they steering the ship correctly? Who are they surrounding themselves with? Monitor your investment. Don't just think that you're working a job. You are an employee and an owner. So you have to do the things that an owner does, which is you got to look at the business and you got to ask yourself, is this business doing well? We missed sales numbers for the last 2 quarters. I don't know what's going to happen. Well, I do. This thing may be circling the drain and you may need to look for an exit, right? But those are really, really important things that I don't see people doing that, I recommend right off the bat, 1, 2, 3.
Oh, that's awesome. And the second item I do want to elaborate, because lots of the listeners, friends, investors reach out to me, yo, can you recommend your CPA? And when I tell them that my CPA charge is this much, like, why would you pay TurboTax? I can pay $100, not 10 grand. I'm like, because he's a tax planner.
Right.
Anyone can file the taxes. You don't even, you can file on your own. You can go to an enrolled agent. You don't even need a CPA, right? But you do need a tax planner who can analyze your situation yearly and before December. So that they come up to me, so many friends. Oh yeah, I got the stocks and I sold them. And now I have 400 grand and I'm going to get taxed. And now what should I do in April? They're asking me. I'm like, I don't know. What can you do now?
Yeah,
it's gone. The year is gone. There's not much.
Nothing you can do. And you're right. And I mean, let's talk about the math. Like I would pay $20,000 to save $100,000.
Of
And
course, it's a
you know,
no-brainer.
it is, and the thing is I get the fact, like people who are doing this for the first time, like it is scary, it's intimidating, but I would say that plan for wealth, plan to win. Because what you don't want to do, and this is where this to me is back to invest in yourself. Investing in a tax planner is investing in yourself,
Yes.
family, because if you have a rock solid tax plan, and to your point, you're meeting with them, whether that's half yearly
Yeah.
or quarterly, you're going to be ahead of the game. And I will tell you, when all of a sudden you go and I'm going to do this exercise, I'm going to sell these shares, here's how I'm going to save myself $250,000. At that moment, you will celebrate versus your friend who's like, well, I wanted to sell, I wanted the money, now I don't know what to do. When that guy gets the bill,
Yep.
that feels like crap, man. And I've been there, like, early days, like, I wasn't sure what to do. And so I definitely learned some of the stuff through mistakes. And now I'm in a much better position.
So is there a way to save on taxes while selling those shares or stocks earned from, exits or IPOs?
Oh yeah.
What
I mean, there
are
are.
different?
There's a lot of creative ways to do it. I'd say, the number one way to save is we just said plan, especially if you have ISOs, plan, because I'll tell you what, GitLab is a great example. They had an early exercise program. So I was planning to buy my shares. The day I walked in, even though I had invested them, I could exercise, which means my tax AMT, I had zero because there was no gap. I was buying them for the same price.
Oh, wow.
Companies
Okay.
are offering this stuff now as a perk. People don't even know that. So the biggest thing you can do to save yourself money on taxes is know what you have, engage a tax planner. That is foundational. So let's talk about it, getting into some more advanced strategies. There are investments out there that will let you deduct against your income. So your regular wage and income, right? So that is, I know some people who are doing some oil and gas.
Oil and gas, I was going there.
Right?
Opportunity zone.
Yeah, we're in the business. We know oil and gas will do it. The other thing that's interesting is, if you have a spouse that is a real estate professional, right? If one person is working and you get the wife, if you have a small thing, this is where, again, real estate and tech, like there's some phenomenal synergies. So my wife went, she had taken a break from tech. She's back to tech now. But when I was going through an IPO, she became a real estate professional, running our property. She was also doing some residential real estate here in Austin. It's just a great counterbalance. And then there's more advanced strategies. I know there's one called the Deferred Sales Trust.
Yes, DST. Yep.
Yeah, the DST that I think is a really interesting strategy that I think it works if you have over $1 million of stock.
Yeah, because the fees are pretty high. So you got to have enough.
Yeah, the fees are, and it's like anything, like think of it as like starting a business. But again, do the math, number one. And number two is, if the fees outweigh what you're going to pay in the taxes, then, I would say do the due diligence and say, okay, will this work for me? Because I think there could be a lot of upside.
Oh, that's great. And I also know that you can invest in an opportunity zone fund.
That's right.
That's one of a lot of people were selling conservation easements, which is now dying down because, IRS is looking at those pretty carefully now because everyone started doing it.
That's right. Yeah.
So no, thank you for sharing some of those ideas. What are some techniques people use to participate in multiple exits or IPOs?
There's a few techniques that people use that, this is a huge pattern I want to bring to light. And so one of them is they get on teams. And this is something that you can observe on LinkedIn and so fascinating, having been through a very successful IPO at Splunk, is, I see, the CFO from Splunk went to Databricks. Oh, Databricks is doing well. Then all of a sudden you see, well, hey, somebody who was a financial analyst, in 2012 at Splunk is now a senior director over there. Okay, that's very interesting. You see a lot of sales team members move over there. We had somebody who left Splunk as well. And this gentleman realized that he had a keen eye for security companies. And so what he has gone and he's gotten a group of engineers together. They go and they build the companies up to, let's say, 10 or 15 million, flip them. Small team takes the equity off the table, earn out for about 18 months or so, take a break, do it again. He's on his third one.
Wow.
And so I think getting on a team is really important. I think the other thing is one of the things that I've done is I created a specialization, right? I created a specialization in IT that I prepare business systems, enterprise applications, your CRM, your ERPs, HRIS for SOX audit. So when my phone rings, it's a company that they're in the zone, like they're in that value add play, and they're like, okay, we see a IPO around the horizon. We're ready to bring in a guy like you who's going to get the systems ready. And there's other people, like I would say, internal audit people or finance people or different types of, VPs and things as well, that's their specialization, is taking people through an IPO. And this happens all over, right? I mean, in the sense that there's people that have teams that they go to I've just gone through an IPO and now we're going to take it from 200 million to $1 billion. There's those teams, and this is where the important thing is. And I learned a lot of this from studying LinkedIn and talking to people and then this is what I'm, now writing down and I want to give to, our people, right? These technology employees is there's a playbook, there's a pattern out here that's happening again and again and again. It's making money in tech equity is not random chance. It's an investment. And if you actually have a process that removes emotion and you go in there and you execute, you can then get to financial independence earlier by taking that, and we can talk about the divestiture later, but doing something with that, but you can get to that high net worth at an early age.
Oh, that's awesome. And I was laughing when you mentioned SOX audit, because that's what I do as well. So I work in the GRC, governance, risk and compliance area. So and I was with PwC as well. And then pretty much that's what my IT side does, that we focus on compliance for SAP, ERP and other ERP systems.
There you go. Yeah, no, it's a good specialization. And and that's the one thing is when you specialize, right, that there's going to be work, right?
Yep. No, this is awesome. So is there anything else we need to talk about equity or IPO? If I have missed anything?
Well, I think the one thing that I want to just end with on this is when you are working for equity and you're thinking like an investor and you're sitting there across the negotiating table and you have, they have the equity, you have to then zoom up and you have to realize you're the asset.
Yes.
You are the thing of value that's being traded for talent. And so this is where I want to circle back that when you invest in yourself, and I talk about like you want to build your career capital, which is your education, your experience, and your results.
Right.
When you're able to then articulate across the table the results that you've delivered, okay, I helped this company grow their revenue by X, even if you are maybe an engineer who added a new feature that then, saw the product grow. But if you're able to articulate in how you were helping the company, you're then going to be seen as higher value. And that positioning is so important in the negotiation for equity, because ultimately our goal is to increase our career capital so that as we, over time, we're trading for higher and higher amounts of equity, our lens is getting better and better so that then we're making better investments with our time and talent as we go.
That's awesome. This was amazing. I thoroughly enjoyed. Thank you so much, Christopher. So let's take a quick break. And after the break, we will go through the same questions I ask every guest.
You're listening to the Wealth Matters Podcast. The Wealth Matters Podcast. For more info about what we do, check us out at wealthmatters.com. It's wealth, WEALTH, matters, MATRS.com.
Welcome back to Wealth Matters Podcast. Christopher Nelson shared lots of golden nuggets. I was mesmerized because I have been through this. Of course, I don't do it anymore, tech, but it made so much sense thinking about it, even when you are applying for a new job, thinking as an investor, because if you are going to invest your time, is same as you are buying stocks of Nvidia or Google or Facebook. So you got to thoroughly analyze the business as well. So thank you so much, Christopher. Are you ready for fire round?
Let's go fire round. I'm ready.
Yeah. Would you be changing any business or investment strategy because of inflation or recession?
Yes. So I actually started this process as I saw that this cycle was coming to an end probably about a year ago, as that's where I really started focusing my investment business from multifamily to mobile homes, because I think mobile homes are a phenomenal recession-resistant asset. I know I'm preaching to the choir here, but I think I like the way that it operates. And then I also think that it, because it's a scarce, right? Because there's such high demand, low, that's where I want to play. So that's really one of the things we did.
No, great point. So I did the switch a couple of years ago. I moved from multifamily to mobile home parks and senior housing, just because of that. When I started seeing that market is going to at some point move. No, this is great. Favorite real estate or finance or even tech equity related book?
Well, my favorite tech related equity book will be my own, coming out from No to IPO. But what I want to share with people is I don't think this book gets enough. This is a book here. It's called What Every Real Estate Investor Needs to Know About Cash Flow.
Yes.
And it's a math book. And I think that when you're starting off in real estate, get to know the math, get to know the fundamentals, because that will give you a strong foundation to build off of.
Oh, that's great. Any tool or website you recommend or you cannot live without?
Right now, I'll tell you what's running my business and my life is ClickUp. I have moved from, I had Asana, I had Notion, I had Evernote a while back, but ClickUp is to me the one app to rule them all. I am just like, I can't live without it right now.
Okay, I got to look up. I haven't used it. Any advice for beginner investors?
My advice for beginners is focus on the education, get knowledge, and get the fundamental math. Understand how the math works. It's not that hard, especially for the tech employees out there. Arguably, you do a lot more difficult math and calculations in your job. This is some fundamental, P&L, some balance sheet, but know the math. Talk to a lot of people, find people that you can, learn from their experience, and then get in the game. Find a price point, find an opportunity where you can make an investment that gets you comfortable, and then participate, because you are going to learn more being engaged, being invested, than you are standing on the sidelines. That's
awesome. How do you give back?
I give back in two ways. Number one is, I'm doing in and around, this equity, the book writing. I'm doing a lot of coaching that's just pro bono. Like, I'm just truly trying to help people out, because my heart breaks for a lot of these people that know it's the right idea, but don't know where to get it. So I've been taking, a few hours a week and really just donating to people, trying to help them out as much as possible. And then, my wife and I also have a donor advised fund that we have to support, social justice issues. And then we're also big fighters of sex trafficking.
Wow. No, I am too. It's for both things, sex trafficking. I'm part of our Underground Railroad organization as well. So no, thank you for doing that. Yeah, how can my listeners reach out to you?
Well, they can reach out to me in a couple of ways. If they want to learn more about, tech careers and money talk, they can go to techcareersandmoneytalk.com. We're going to be launching the podcast late August, early September, so they can sign up, get notified now. On that same mailing list, they'll also learn about my book and the book launch. And then they can always reach out if they're interested in what I'm doing in investments at Wealthward, WEALTHWARD, moving you towards wealth, wealthward.com. They can learn more there.
Thank you so much, Christopher, for your time.
You're very welcome, Alpesh. It was a pleasure.
Yeah, same here.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!